Bill, and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective, asking ourselves what happened today and does it tell us anything about tomorrow. I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Also do a show on Sunday night, a weekly wrap. Of course, there's a lot of material on the site available to you. Free information, registered information. You have to be registered to sign in. Videos, premium content. There's a lot of material here, folks. There's a lot of stuff that's available to you on a limited basis. And if you ever step up to the point of being a subscriber, there's a lot of data available to you as a subscriber. Valuable data, actionable data, data that will make you money and make you consistently profitable over time, which is what it's all about. As far as consistently profitable, let's turn to the markets, see what they did today. We were coming into today thinking we might get some clues with respect to tomorrow and the Fed meeting, but as you can see, pretty much flat. I don't think anything closed more than about 1/3% away. The S&P was the worst. Financials there were the biggest culprit. I see some green after hours a little bit here, but everything was flat today. Gold was down about $10, so we had some pressure there, but the rest of the world, in terms of the U.S. markets, was pretty much flat. What we hoped to see, but didn't see, was some tests of these markets that would give us an indication of where we were going to try to go. So let's zero in here and see if there's anything here that helps us out with respect to that question, because tomorrow is the Fed announcement. They started their meeting today. Nobody expects anything with respect to tapering. Maybe there's going to be a language change. Maybe there's going to be something. Europe is already telling us they have problems. That's been capping us. We'll go to Europe in a minute because they had a big bounce yesterday. You need to look at what they did today. If one of the things to kind of backtrack here, one of the things you're always looking for is something that will give you clues, right? What's most important? That's true whether you're trying to find a benchmark. That's true whether you're trying to find a leading indicator of what the market wants to do next. Picking up on Europe has been a good thing because it's allowed us to understand what's happening in these markets and what probably is going to happen. This move off the top, we didn't test that top. This move off the top was a European move. And without us being keyed in on Europe, it wouldn't have happened that we would be on the right side. Swing point low is broken, right? You get a little bounce. You come back into the December 11th bar. That's the bar we've been talking about. That's the important bar. Again, you always have to be able to figure out which one and why, and you got to be able to measure against it. You're coming into it. You're struggling. 4 days now struggling. Anyone else is probably going to tell you, because the Fed's coming, tapering, people worried, all that kind of stuff. Well, maybe. I don't think so. I think it has more to do with what's happening in Europe and how that's affecting us. Folks, this is setting up. Remember, it came back in, did a retest regen, right? That's the first thing to recognize. Got a little bounce off of it, just like it's supposed to, but it didn't carry. Hasn't been able to carry. Now, maybe that will change tomorrow. But this certainly is starting to look like an ABCD structure to the downside. Take you down to the bottom to do a full retest regen down here and potentially take you into this area at these 2 bars, the big bottom of those bars. That's where the last support zone exists on this time frame. That's the S&Ps. That's conjecture. That's not known. There's nothing they're telling us that it's going to work that way. I mean, you could draw this, and this is what you have to be careful about. You can draw this multiple ways. I mean, it's a range, and it's still in that range, right? That's another way to draw it. All right, as long as it stays in the top half of the range, nothing wrong with it, and that could be said. So this one's not telling you anything. Which one is? That's the next question. So you go looking around, right, and say, okay, what else is happening? Dow Jones Industrials. Now this has been the weaker of the group of late. They got a nice springboard action today, but it couldn't go anywhere. Boeing comes out, raises dividends, announces a huge, what was it, $10 billion, I think, buyback. Big numbers. And the Dow couldn't move. And 3M got a nice big bounce going today. Two big, large weightings didn't move it. Can't go anywhere. Now, maybe it's the Fed, maybe it's something else. Maybe it's just nested ABCD structures. Right? I mean, you got the one that never finished, right? Usually when they get going, they try to finish. This one wants to try to reach down to this area. Well, now you're setting up a one inside of it potentially, right? Which will get you down to that same sort of area. Nested ABC structures on the way down potentially. We'll see tomorrow. But that one again, still a range, still in the higher end of the range. If I pull over the chart here and look at it from a weekly perspective, right? On the weekly, you have this swing point high that's being a retest regen right now. 15,658. We got to 15,703. Right? Another 50 points down. What does that do? That gets you into the retest regen on the weekly and finishes up those ABCD structures I just talked about. Still, those aren't the ones giving us clues. The Russell and the NDX were the ones we were watching today. Now, the Russell gave us a small clue, and it was tiny. And it's so tiny I can't even draw it. But if I take that and look at the high was 120.17 yesterday. Today's high, just got over it. Bounced into it twice today, got over it 1120.26. So you got 1120.92 is the high it was trying to get into here. It couldn't. Yesterday's high, 1120.17. Today it gets over it. So it goes over it, back under it, but what happens? Volume slightly higher. Okay, so that doesn't give you any kind of a over-under situation. It still wants to try to get in there, hasn't done it yet. Okay, so that's an interesting situation. Can't get over it, still wants to try to get into it. NDX. If I look at this one, this was the other one we were looking for a clue. The bottom of the 11th bar, December 11th, 34.64. We were looking for a test on the bottom. Got the 34.61. So it's underneath it, right? But where's the close? 34.69. Back over it. So you can't stay under it. This one's trying to get back and break down to do a retest regen itself, right? But it hasn't. Well, excuse me. Actually, this one isn't. I believe the broader Nasdaq is. This one already has. But this one's at that swing point low, trying to break down and change the trend, but it hasn't been able to. Again, doesn't give us a clue today. None of these do. Where's the clue? Well, it's not in these indexes. Where it is overseas. So let's go over there. World markets. And as you know, it's Europe. We'll start with the CAC. So the French market, big bounce yesterday, huge bounce, right? What does it do? It comes back into that bar from December 4th. 996 there. Came into it with 936. A little bit less volume. It also came into the large bar, or was trying to get into the bar. 41.48 was that one. It didn't get up there. That was the other bar it was trying to get up to. Ran into trouble. And what does it do today? It gets about halfway up the bar on the open. In other words, it opened down and it never recovered. Traded lower all day. Volume not expanding, but it doesn't matter yet. It matters when you get to the bottom. Why is this important? Well, because this is the guy that started everything. Right? There was multiple swing point lows here. It got broke. That led to the fast move. Now tries to bounce. Can't get back up and do a retest regen. Tries to bounce again. Can't get over resistance now. What is it doing now? It's going to try to break it down again. if you look at the structure, right, your ABCD structure inside this thing projects a long way down, another 3.5% or so. It's still in place. Nothing's changed. The DAX. Now the DAX came out, both of these bounced big on PMI numbers, right? The DAX was actually good PMI numbers. The CAC wasn't. The French numbers weren't that great. They just simply bounced because Germany did. But what happens today here? Inside bar, right? Big open candle yesterday, opens almost near yesterday's close and works its way lower all day. This one still has the ABCD structure down, which is going to break multiple swing points if it fulfills, which will lead to a faster move down as a result. Now what does it have? Well, if this turns out to be the high, you've got another one that measures about the same spot. So you got nested, one here, another one there. Same scenario in that it hasn't changed anything, right? The only way you change this is you get back over these highs. It wasn't able to do it. Got right up there to it, tried to test into it, couldn't do it. Right? That high was 91.93. You got the 91.87. Didn't quite get into it. Can it flip around, get back up there? Yeah, it can. Does it have to? No, it doesn't. Is it trying to go down still? Yes. And is it going to break those swing points? Sure looks like it. These are the markets that are driving things. It's not our markets right now. If I go over and look at the FTSE, you have the same situation here. This one has done multiple ABCD structures all the way down, right? Just one after another. Up, down, projects down, right? And then you go from there to there and back down again. And you can just keep putting them in here, right? You got another one here, right, that projects down. You get another one here that projects down. And that one's even larger and it projects a little bit farther. One after another. Now you got another one, a nested one in here. Does the same thing as the rest of them. Wants to project down. Folks, they're all lined up the same way in Europe. All three of the big markets. The smaller markets are already breaking down worse for the most part. Europe wants to trade lower. For whatever reason, Europe wants to trade lower. Most of it has to do with economics, it looks like, and the expectations by the markets that Europe is getting worse off. One thing that we never talk about anymore, and I mean we in the larger sense, in the popular press, is what are we going to do if there's a recession? It's not like we're going to lower interest rates. You know, there is something called a liquidity trap, right? Where if you start pushing too much on the string, you're going to trap yourself and not be able to get out of the liquidity trap that we're in, right? I mean, it's a bad situation. I'll explain it some other time, but you know, there is the potential for us to get into a situation we can't get out of. That's what Japan's been in for 20 years, and now Uncle Abe thinks he's getting them out of it. He's not going anywhere. He's simply gonna raise his interest rates to the point that they go bankrupt is what he's going to do. But you know, these things take a long time to play out, and that's what it's doing. All right, so Europe. So Europe's the story. Let's switch back to the U.S. markets and go to the sectors. And let's now put this, because these are the ones that give us some clues, put this in perspective with respect to tomorrow. Europe is telling us that tomorrow is not going to be what most people think it's going to be. Now the Russell can still try to get a little bit higher. Maybe it does that first thing in the morning. Maybe it does it on the Fed meeting. I don't know. But the Russell hasn't failed yet. It's trying, can't quite get there. It doesn't have any juice, but hasn't failed, right? It hasn't got into it and failed. But if we start looking at the sectors, these are all lined up the same way, right? They've been going the way things work out, right, when you congest for a long period of time, and you congest in such a way that you get swing point lows to form, right, and those formations of the swing point lows can allow for the faster moves, right? So you got one here, you got another one down here, and on the weekly they're farther down in the U.S. markets, unlike Europe. What would happen with the U.S. markets if we were to set up like Europe is that these ABCD structures would start to complete. These now have nested ones. This one just failed at that December 11th bar on the high. The IYT did. These ABCD structures come down, they break swing point lows, they get down here, whatever, they come back up some, and all the while you allow, and I'm going to pull this back out, you allow swing points to form at a higher point up here. Now let's see what this one is. 1, 2, 3, 4, 5. This one won't be able to, right? The swing point's way down here. So if the swing points are able to be created at higher price points on the longer term time frames, then you can get some real damage to take place. But right now that structure isn't there. The point of talking about the structure again, and this is true here, it's also true on the indexes, is we're not in a position for the United States markets to sustain a huge heavy run against them. The structure just isn't in place. Can we get a further pullback? Yes. Are we going to? I think we are. I think it's likely to happen. And it looks to me like the catalyst is going to end up being the Fed tomorrow. But will that cause a huge decline? It doesn't appear that it will. It looks to me like probably more what's going to happen is we get some sort of a decline as Europe goes and finishes off what it wants to do, right? And then we get the move back up. And so that's the way it looks to me. All right, let's see here. So that's the IYT, and let me see which one. So I'm going to point out the 2 or 3 interesting ones. So semiconductors, nice big push up, no volume, right? This one came back. Remember, this was doing a retest regen. This one came back. There was 3 swing point highs that broke on the way up. It came down and did a full retest regen on the lowest of the swing points. That's a sign of weakness. Now, I mean, because typically you would come back to your higher one, which would have been this one, and you'd hold up there, but it didn't. So what does that say? Well, that means, right, if you really take it in a literal sense, that means you failed to retest regen on that one, you failed to retest regen on that one, and you finally held on this one. That probably isn't going to go anywhere on the way back up, and when you look at it, it's coming back into prior highs, not as much volume. Let's see what that high was, 41.44. And it actually closed over it. So maybe it gets back up a little bit higher and gets back into these higher ranges. The bottom of this one was 41.58, so it tested into that one and failed on less volume. This, even though it looks strong, it actually isn't as strong as it looks. XLB, that one actually had volume today. The XLE, the XLF, these guys look weak. This one actually had volume today on the way up, but like look at the XLF for example, and this is a key sector. XLE, that's why the SPX was the only one down 1/3% today, is because these are trying to push lower. They're trying to push back in. The retest regen on this one is 2104, and yeah, it's just going to try to move in there and do the retest. And that's the XLF. The XLE is actually trying to break a swing point low. If I look at the XLI, it came and failed at the 11th high, but this one actually had volume. Another one that joined, we've been talking about, so that's the XLI there. We've been talking about, trend transitions. Well, here's another one that transitioned tonight to bearish. That's 2 of them now. Utilities and now the consumer staples are bearish. Some people would say, "Oh, well, that's good because that says that the money's chasing early cycle stocks." Yeah, I guess you could look at it that way. And actually, this is not that bad off. None of them are bad off from the intermediate term perspective, except for the utilities. All of them are still bullish. So, certainly it's not like, the market's falling apart here, but, when one or two start changing, typically more follow, and so that's the story there. This one's already changed as well. The XLV can't get anything going as it tries to get back into that. Remember, it tried yesterday into the 11th and failed. You get a pullback. Let's look at the ox markets, and then I'm going to wrap up here the thoughts about tomorrow. I want to just quickly look at the dollar and the euro. So let's start with the dollar, because these, tomorrow the things that will move and that you have to try to key in on the Fed announcement itself. Test on the Russell is one of them, right? If we're looking at equities, it's the Russell. And that's on the top side. On the downside is the NDX, right? Those are your two markers over there. The other markers, though, of course, will be bonds and the currencies. This dollar still looks like it's going to try to work lower. Let me see if the FXE is going to try to break higher. Yesterday we saw FXE had volume come in as it pushed back up, and it has it again today. FXE looks like it's going to try to test the top. It has, as I've said before, it's set up multiple ABCDs on the way up, and now it's got a big one that will break it out if it's able to do it. So the dollar looks to get weaker. Okay, if the dollar is going to get weaker, that says they ain't going to taper, right? That's the correlation there. Any talk of tapering, dollar would get stronger, not weaker. Let's see what bonds. Bonds are the same scenario in that if they get weaker, which they're trying to, although today they bounced, so they're hanging around down here though. If they start to break down, interest rates go up. That's a result of, let me see, you got to think about these relationships. So if the bonds break down and the rates go up, what does that tell me? That tells me we're going to taper. Yeah, rates would rise if you taper. So, I don't know, that's mixed messages between the two of them. I don't know which one's telling the truth. What about gold? Gold would go up if we're going to get looser on money. And we're not, right? That one actually says, well, I don't know if gold tells us that, but gold certainly isn't running higher as a result of more easing. If the euro heads higher, though, that should help gold, but gold's kind of in its own little world right now. Let's see if silver's is weak. Actually, silver's a little stronger. Okay, so let's take the last couple minutes and talk about tomorrow. So the announcement's early tomorrow because they got a chairman. Fed chairman is going to give his last words, his last rites, I guess, before he leaves the scene. I wonder how history will judge that man. I think it's going to be a mess, but, we got unprecedented policies that are unproven. And I don't know, it's sad, actually. It's sad what we're doing. It's almost comical. It reminds me of like some of the Saturday night skits, where you had like medieval doctors doing bloodletting, right? Where they, it was all ritual and unknown, and they would do crazy things to try to cure the patient. That seems to be where we are with monetary policy. It's almost kind of the same scenario. We're practicing unknown solutions. This is interesting. It's an ABCD structure up potentially. So we'll see tomorrow. But going back to the Fed, it appears to me that there's going to be a flat market in the morning, early rate announcement. You'll get some gyration off of it, but you can't do much until the Fed chairman starts to speak, because he can say anything. Okay, so what's an outgoing chairman going to say? I think he's not going to say much about anything, because it's no longer his role, right? I mean, he's 2 weeks away from retirement, so to speak, right? Or a month, or whatever the number is. So my guess is, just like Yellen was in a quiet box for about a month and a half as she was waiting on Senate confirmation, and still is, the Fed chairman is not going to say anything to rock the boat. So the real move is going to be the first move tomorrow, which is off the news itself. And that's the one you're going to have to pay attention to. And then there will be some gyration, but whatever that first move was probably is going to carry once it's seen that the Fed chairman's not going to change anything or say anything to upset. Where's the risk? Well, the risk is that they change the language and actually try to taper, or start to taper, or tell us they're going to taper. I mean, that's where the risk is. So, is that likely? No, it's not. Is it possible? Sure. So if that were to happen, then you definitely get a sell-off. But I suspect that's a very low probability event. So more than likely, we're going to get more of the same. We're not going to get a big bump either way as a result of what happens, because it's probably what's already expected. And so then what? I think Europe takes over again. So maybe you get a little bump out of it, but I don't expect it to last. Europe will probably exert its pressure again, and we'll see this market try to work back down either tomorrow or afterwards. Within a day or two probably. That's my take. That is the Daily Wrap. Thanks for joining. Have yourself a great night, and I'll see you next time. Take care, everybody. Good night.